Hi guys, it is March 8th, 2021, and futures are pointing to mix open actually came off its lows after David Tepper, which is a very known hedge fund managers, Apollo management company, came on CNBC and said that it's very difficult to be bearish on stocks. So he's actually getting very bullish on stocks, and he said that the recent sell-offs in treasuries that makes yields go higher is almost over. So he thinks that the yields rise is temporary, and the stocks will go higher after this. And only separate news: 1,400 stimulus checks will be received by Americans in the next couple of weeks, and that means that $1.9 trillion package is supposed to be approved in pretty much in the coming days by the House and sent to the desk of President Biden. And actually, that's actually sent the bonds rising again. The 10-year Treasury is trading around 1.6%, despite what David Tepper is saying. And by the way, today is March 8th, which is International Women's Day. So congratulations to all women. And so let's jump to SPY, S&P for ETF for S&P 500, and SPY is sitting on a 30-day moving average, and it's make or break pretty much for SPY because it could go lower, it could go higher. It's difficult to say at this point. There is no distinct pattern for SPY, but hopefully it can go higher, and eventually it will go higher because traditionally, I mean, the SPY, if you invest in SPY, your yearly percent of return is on average about 9%. So so if you're a long-term investor in SPY, it's always a good idea to invest. Okay, so QQQ is also actually a little bit lower, but trading below 50-day moving average, which is not as good as of a chart as SPY. And actually, I don't know where QQQ is going. Was the bond yields rising? So I would be careful with QQQ still. So it can tank a little bit more. So let's jump to stocks. And before we do that, if you want to see my trades on pretty much everyday basis, you can check out a link to my Patreon club in the description of this video, and drop me a like as it helps me with YouTube algorithm. Okay, so we'll start with Costco. Costco Wholesale is trading higher pre-market, and it reported actually on Friday, I believe on Friday, quarterly earnings of 214 versus 245 expected, so lower earnings. Revenue came in above forecast. Comparable store sales rose 13%, and digital sales rose 76%. But Costco is trading at the very, very low range with RSI around 18. That's unbelievable. I mean, I don't think I've seen the RSI 18 since the pandemic hit, when like SPY and QQ were trading around 15, 16. But in general, it's very low RSI, and I think, I mean, Costco did report a miss, but it was like 41 cents hidden cost on the rise on more wages, pandemic wages, and in general, not bad report from Costco. And this is a really good time to pick up this stock, trading at the 18 RSI. I think the stock will jump at least temporarily. So I think it's a great idea to get in on the stock, even just to buy calls on it. I think it's cannot be missed. Okay, COST. Okay, next company is NCLH. Norwegian Cruise Line. So Norwegian actually is one of the alternate reopening stocks, and it tumbled on Friday after announcing public stock offerings the previous day of 47.58 million shares, which is over 15% of the float. So it's a big offering, a huge offering, and actually the stock doesn't look too good to me. I think it may go a little bit lower, so I would be careful with NCLH, even though it's just considered to be an ultimate reopening stock, just like other cruise lines. And I don't know. It may go actually lower. I would be more inclined to buy like RCL or even CCL. Okay, but NCLH was offering of 15%, over 15% of secondary offering. That's a lot. That's a big offering for me. Okay, Disney. Okay, Disney shares are higher, and they said that they will be able to reopen Disneyland after more than a year. And California officials cleared theme parks and stadiums to open at reduced capacity. And one of the Disney movies, I forget what's the name. It's was a big hit in the box office, and Disney shares is the ultimate opening stock, and I think it's looking good to me. And I think Disney is going over $200, so I think it's a pretty good time to get in on Disney. Okay, GE. So GE is also trading higher and is near a $30 billion deal to merge to merge its aircraft leasing business with Ireland's AerCap. Okay, so AerCap, stock symbol AER. Okay, so this stock is also higher, and I actually would like both stocks, and I think both of them are going higher, and that's also an reopening stocks, and G I think will be going back to like $20 eventually, and AirCap, I can't believe the stock was trading like around what I remember it was trading like $10, $15 last year, and now it's trading at 56, and I think it's going even higher than that. So I would be buying both stocks actually. ADPT, Adaptive Biotechnology. It's biotech. It was reported that it received emergency use authorization from FDA for its T-Detect test, which confirms a recent or prior COVID-19 infections in patients. So this stock was trading in deep oversold territory, and this good news could take the stock significantly higher. Actually, it could have a big bounce. So I would be buying the stock on this even after being up like $3 pre-market. I think it's a good opportunity to get into the stock because it was oversold, and I think it will recover and go higher. Okay, ADPT. Okay, XPEV, XPeng, another oversold stock. It was trading with RSI 22, and it reported better than expected revenues, but missed on bottom line, wider than expected loss. But the company blamed it on the Chinese New Year, extended Chinese New Year, and it also announced a timeline for the launch of its forthcoming vehicles and issued strong forecasts for its fourth quarter of 2021. And I'll tell you, XPEV is one of my favorite actually electric vehicle companies, and actually I like it more at this point than, for example, NIO or LI Auto, because it's pretty much heavily oversold, and it has a lot of potential in my opinion. So the stock is a little bit higher pre-market, but I think I wouldn't be shy to picking up and or buy calls on it. Okay, XPEV. Speaking of NIO is lower pre-market actually. After was it was downgraded by or rather analysts from Jefferies cut its price to $38.80 from $60. I'm always amazed how these analysts, when the stock is trading around $60, like 55, $58, they put a target of $60 and say, "Oh, it's a huge buy." And now the stock is trading at $37, and they cut the price to $38. It's unbelievable. But in general, NIO is also oversold, and a little bit lower for me would be a great pickup, like around $35. But in general, NIO is trading in the range where I'm interested in the stock. Okay, so I would use this opportunity if it tanks a little bit lower to buy this stock. Okay, FB, Facebook. So Facebook shares trading a little bit higher. I mean, it was flat the whole morning after a racial bias investigation of Facebook by the Equal Employment Opportunity Commission has been designated as a has designated bias at Facebook as systematic, according to lawyers from four plaintiffs, and plaintiffs accused of being hiring and bias hiring and promotions. And in general, I mean, all this time, Facebook is getting bad news, the stock just keeps going higher because, I mean, it's very inexpensive stocks. It's trading at like 20 times forward earnings, and they beat estimates every time, and they have around 3 million advertisers. Okay, so before it was a campaign to take Facebook down by big companies, and like 300 companies boycotted Facebook. But you have to keep in mind they have 3 million companies advertising on Facebook. So 300 million companies boycotting Facebook is just like nothing really for me. And they're targeting smaller businesses. They're not targeting like big time companies. Okay, so their customers are smaller businesses. So in my opinion, Facebook is a good opportunity to buy the stock if it falls, and I will be buying it on the pullback. Okay, and finally is Big Lots. So Big Lots is, I don't know, it's trading. There's no indication, but it's an ultimate opening stock. The discount, it's a discount retailer, and it reported quarterly earnings of 2.59, 9 cents above estimates. It's very inexpensive stock, and but it also said that it expects the results this year to be significantly impacted by the pandemic. But I don't know if we will have vaccine, will reopen. We'll see. I mean, maybe there will be actually this company will be affected in a good way. So actually, it's the ultimate. Opening play and very inexpensive stock, like I said, and I would be buying actually big lots on any pullback because I think the stock is very cheap and it's going higher. Okay, that's it, guys. Don't forget to subscribe to the channel, to click the like button. I'll see you Thursday.